What's up, traders? Welcome to 7minutestocks.com, utilizing technical analysis to suggest security direction based on human emotion. Today is May 3rd, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Alright, we have a lot to cover. Let's get started. The first thing I want to talk about is obviously the S&P 500. As you can see here, the S&P 500 has broken down from this rising wedge. The thing that held it from breaking down is well, we have this mathematical calculated line here. In addition to that, as you can see right in this area here, we have two moving averages coming together. That is giving a lot of I guess you could say a lot of support here, preventing it from breaking down. Now here's the thing: if the S&P 500 can break down and close, again, it has to close below these two moving averages here, then we can suggested that next week we may have a continuation to the downside. However, on a technical level, the S&P 500 is still in technical strength. What I mean by that is we still have this up movement, this consolidation, and we may actually push even higher. So all depends on where we close tomorrow. Tomorrow is Friday, so normally history shows that Fridays and Mondays, including days before holidays, are very low volume. And when you have low volume, it gives the institutions chances to spike the market higher, and manipulation is a lot easier when the volume is low. All right, let's get right into the SPY, which is the ETF that tracks the S&P 500. Right now we are in this what you would call a symmetrical triangle. What we have here is it's landing right onto these two moving averages, giving it strength. Now in a symmetrical triangle, you can either break down or break up. Right now this is a bullish consolidation in a symmetrical triangle, and it has was able to keep from closing below these two moving averages, as in the S&P 500. If we can close below these two moving averages, and yes, it has to close below these two moving averages, then there is still a chance that the S&P or the SPY could break down. If not, this is a very nice bullish consolidation. Tomorrow is Friday, low volume. Again, with low volume, it can push the markets higher and possibly break out of this symmetrical triangle. So we just have to keep an eye out on that. There's nothing right now because it's mixed technical. You have one signal that's bullish and one signal that's not. So it's going to be hard. I'm thinking sometime this week we'll have a better idea once we get the weekly chart involved. Okay. Now let's take a quick look at the dollar. Dollar up, market down, and vice versa. Okay, so we have this head and shoulders. We came down, we came up to retest the neckline. We came down again, came up to retest the neckline, and then in the previous video I said if we break out of this neckline, which we did, that would negate this pattern. However, we did not close above, and I said the caveat is these two moving averages here. Once price went into these two moving averages, it put a lot of pressure on it, which brought the dollar back down. Dollar down, market up, so that caused the market to float back up later in the day. As of now, what the technicals are showing is that the dollar is in technical weakness. Will this pattern fail? Signals are showing that it's not a very strong pattern as of now, so it's really a 50-50, and with a 50-50 I wouldn't want to make any trades based on a 50-50 odds. So if the odds are in my favor to take the trade, then I'll take the trade, but right now we just don't know, because the pattern is going against the moving averages, etc. So we just want to stay in cash for now. And let's take a look at the VIX. The VIX, when I started these videos going public, I said we'll get a bounce here. That's what we did. We came back to retest this trend line down here, and then now we're heading higher. We're right into the 20 moving average. In the previous videos I said that I am expecting for it to hit the upper trend line. If we can break out of this upper trend line, that'd be great. This is a symmetrical triangle, so upside potential or downside potential is possible. Alright, a few stocks that I want to talk about is one of them is Apple. Okay, let's look at Apple. We had this mathematical calculation up here. This has already played out. I'm gonna have to redo the mathematical calculation to get oh, actually it looks like I already did. This is I would say where price should go before it gets a bounce, a pretty substantial bounce. Right now, if you look very closely, Apple actually closed below this 50 moving average. That's showing a lot of weakness in Apple. Let me get rid of this line here. Okay, so this today's candle actually closed below. Yesterday they actually saved it and closed it above, but now it's closed below this 50 moving average. Therefore, there is a possibility that Apple may come all the way down to the X marks the spot. Would I actually take a swing trade on that? Probably not. You know, this double bottom is kind of close together, but definitely a intraday trade would be very tempting based on the in the pattern. I mean, if we come straight down right into it, then yeah, I would take an intraday trade on that. And again, this is these dotted lines here is a mathematical calculation of which Apple has a potential of getting to before having a substantial bounce. All right. Now let's take a look at American Savings. This is a trade that I'm actually currently in. I'm not too comfortable with this trade, to be honest, but this is the mathematical calculated line here. This is the trend line here. We had a shooting star on volume, right? And I'm pretty close to being stopped out. Today it actually pulled in. This tail here is actually what you call a fake print, so that's not real. But what's interesting is that this mathematical line is holding up, okay? We'll find out tomorrow if she can pull down or if she'll continue higher. Now again, you know, the only thing is if this happened, this red candle appeared during the earlier this week, I'd feel a lot more comfortable. But because tomorrow's already Friday and it's gonna have low volume, you know, there's a possibility that the you know, the bias is gonna be, you know, either flat to up, you know, for the markets in general. And you know, like anything, stocks like to follow market movement. So we'll just see what happens tomorrow. We'll see if this mathematical line does hold. If it doesn't hold, then I'm gonna have to come up with a different, you know, add a couple more calculated lines here. I mean, I have 12 in total. I just picked these lines here because it seemed like it had the most relevance. Okay, so we'll watch AXP for tomorrow. And then, you know, this is ABX. ABX, we had this mathematical calculation here. It came right into it, as you can see that, and it closed right above it. I mean, to me, it just blows my mind sometimes. I mean, if you watch the previous video, you'll see that this is the line that I drew. However, the one thing I don't like about this is that it did pierce it. It did close above it, but it did pierce it. So there is a slight possibility that this guy could come down even more. But again, if tomorrow is a float up day, then we actually might get a bounce off ABX. Last but not least, we have Ford. Ford, the mathematical calculated line actually failed today. It broke through the mathematical calculation. We do have this support line here that I am expecting a bounce off of. However, if I had taken this trade, luckily I didn't because the risk reward just wasn't there, and that's why a risk reward is so important. My stop out would be here, so you know, we have some ways to go before we get a little bounce higher. And that is your 7-minute stock update. Until the next video, have a nice day.